The Fed begins its two-day policy meeting. For a look at what we can expect, let's welcome former Dallas Fed President Richard Fisher. He's now senior advisor to Barclays and a CNBC contributor. Richard, thanks for joining us. Every time that we see you, there's I guess, more stuff to put into the mix to try to come up with what type of conclusion we should draw. We've got Delta now. We've got some recent employment reports, some good, some bad. We know how hard it is to find people, and there is demand, but not maybe enough people. The Fed's in a tough spot. What would you do? What would you be recommending that the Fed do if you were still in that room?
I think they'll still flesh out the idea of tapering the balance sheet. And I think the surprise, Joe, or the most likely thing you're going to see that's a little bit different here is how they move the dots on the dot plot. And I'm willing to suggest that one of the surprises might be you'll see more dots move inward in time as to when rates are likely to lift off the zero bound. So that to me will be something to watch for. I'm not sure we'll get, given all the background noise right now, much more definition, although we might, of when they might begin tapering. And the issue with tapering here is also the speed with which it's done. It's going to be done over a 10-month period, as it was before, over a 1-year period, over a shorter period or longer period. Those are the kind of things that I think need to be articulated, and I'm not sure we will get them at this meeting, but we will get a change in the dot plot, and I think that'll be noticeable.
A lot of market participants took solace from Jackson Hole because they said that Powell had clearly delineated the difference between the beginning of tapering and actually raising interest rates. What you're saying right now is that that's not what you should have taken from Jackson Hole, that rates will rise sooner than we had anticipated. Is that going to be problematic?
Joe, that's not what I'm saying. I'm saying the committee will plot their forecasts, and I'm guessing that there's a significant probability, not 100%, that forecast of when rates will rise will move forward in time closer to 2022. This will also be the first time we have 2024 on the plot. So now, Powell goes out of his way to make sure that we don't emphasize the dot plot too much, but people do notice. I'm a former dot. I'm a retired dot. And it's kind of a highly subjective, silly exercise in my view. But that's the only way you get a sense of the way the committee's thinking at this moment when it's plotted. So that's the only thing I would say might be a little bit different here. I don't expect the language to change a whole lot. There'll be some commentary. We do know this, Joe. COVID-D is beginning to roll over. We're seeing it in the data. And that might give a little bit more encouragement that the economy still is doing fairly well, slowing down significantly in the quarter. But we had a robust July and a little bit of a slowdown in August. So if this rolls over, then we should have better economic performance than is being projected right now in the fourth quarter.